Starting off with a look at the intraday chart. On Friday, we got the non-farm payrolls report. It was a huge miss, but some of the underlying themes within the report were a little bit more bullish, such as the average hourly earnings not being as high as expected, and the actual unemployment rate came down. So we started off with a gap up open. I'm pointing over to the left of the chart here. The very first candle in the day, we made our high for the day. Initial balance high was the high of the day. Then we kind of rolled over from there. Right before we hit the end of the initial balance period, we took a look below the 50-day, tried to bounce off of that, but then came crashing down below it and spent the rest of the day below the 50-day. So therefore, we went on to make a fresh new low because we could not regain the 50-day or even get back into the initial balance range. Made a fresh new low for the month of December and for the week. Tried to make this comeback into the close, but the final candle rejected right at the initial balance low and rejected below the 50-day simple moving average. So we wound up with a weekly close below the 50-day. Now, we have been selling, pretty much for the last 2 weeks straight. I made this other intraday chart to show you guys, a clean one, just to show you in perspective here. Here's the all-time high we made a couple of weeks ago. And then we failed to make a new all-time closing high that day. And then we rolled over and sold off, and we've been selling off ever since. And now we just closed a week below the 50-day. So either we are extremely oversold here and we're going to see some dead cat bouncing on Monday, Tuesday, trying to get the options lower, because right now the December 10th, next Friday expiration, is super expensive. But that's sort of like the playground for short sellers, for short option sellers. So sometimes we get a wild swing in the other direction to get those puts lower and lower and lower so they can cover them, and then we come crashing back down again. And it really all depends on whether we can regain our 20-day simple moving average. We go over this time and again, theme after theme. It always comes back to whether we can regain the 20-day simple moving average. So let's take a look at the roadmap and so forth and see where we're at. So that's how we ended Friday. Let's start with the roadmap first. So on Friday, before I left for the day, I gave you this potential double down on the day that we could reach all the way down to the 44.82s based on a loss of the 50-day simple moving average. Didn't quite get all the way there. Got down to 44.94s. And then, as I showed you, we came back at the end of the day and missed the 50-day simple moving average. Well, if we come out of the gate strong on Monday, say we open above the 50-day and we get rolling up to the upside, we need to see Friday's high get taken out. We need to see the 10-day simple moving average. It's probably going to be down here in line with Friday's high, or maybe even a little bit below it. So we got to come out of the gate, either open above the 50-day or take it right out, like in the first 15 minutes, and go. Get up over Friday's high and over the 10-day simple moving average, and somehow get back here to the 20-day. I kind of have set this green bar up here on the roadmap. Let me make this a little bigger. It's a little easier to look at. I'm just trying to show you what I would give you as a screenshot, but let's blow it up here a little bit for the purpose of this video. You need to get up here in this green bar, get back to where you can see all this support and resistance was once upon a time, until we kind of fell off the shelf here and fell down. Got to get back above this 20-day on a closing basis. If we rally right up here to this 20-day and fail, this is going to be a great short entry, because we're coming back down to at minimum test this low, if not break lower. If we regain this 20-day simple moving average on a closing basis, be it Monday, Tuesday, Wednesday, whatever next week, that means this low that we set on Friday and this weekly close below the 50-day was it. It was sort of that flush lower on a couple of standard deviations that really brought in the buyers, and that we're back in terms of our end of the year Santa Claus rally again. We got to see a recapture and close above the 20-day. And it all will start with whether we can open above the 50-day tomorrow or open below it and take it out really quickly in the session, like first 15 minutes, maybe first half hour. Okay, so let's see how that all goes. If we are going to head lower, let's take a look at this fork chart. This low on Friday, if we had fulfilled that double down target to about 44.84, we would have taken a look below the 100-day, and we would have taken a look just below, or right at, we would have hit right on the median line of the bear fork that we're in. We have a fresh new bear fork using our latest new all-time high. On Monday, this median line is going to fall to 44.85, and it falls a little bit lower each day. So if we do hit a lower low, maybe it's just going to be another little 10-point look below where we were at, or maybe we're going to break this median line altogether and maybe take a shot at trying to hold the bottom of the bull fork instead. So we've got 44.85. If that breaks, we've got our 44.50s. This all makes sense because you can always keep track of where you're at using the 80 handle rule. If we're not going to hold those 44.80s, we're probably going to hit the 60s. And if we don't hold the 60s, we're going to hit the 50s. And if we hit the high 50s, just looking into that 44.50 window, we've got the bottom of the bull fork to hold us for support. And if this bull fork were to go down, then I think we've got really nothing supporting us. We're going to wind up coming all the way back down here towards the 200-day. We have a still unresolved low that ES made in October that was never seen in the light of day with the S&P 500. We've got the ES contract rolling over next week because it's December week 2. It's week 2 of that expiration month for the contract. So it rolls over when futures reopen Friday night of this coming week. And then the week after that, when we have monthly OPEX, it expires on the open along with the S&P 500 monthly options. So maybe the market intends to take care of this unresolved business over the course of the next 2 weeks. So if we come out of the gate weak, cannot regain our 50-day, and we can't hold these 44.50s here at the beginning of the week, that's where this support is going to come in here to hold us inside this fork, then really we've got nothing holding us up. We've got a lot of gaps to fill. We've got a lot of lows to back test, and ultimately something to resolve with ES, with futures. So let's see how that all works out. Okay, I'll just show you the roadmap one more time here. You can see these gaps a little closer up. If we were to break down, we'd be in this this black hole here on the roadmap where there really isn't anything until we get down here to this next gap all the way down here in the 44.40s to 44.30s. So really holding that fork keeps us out of this sort of mess of gaps that exist further on down below us. And we sort of dipped a toe into this next gap with the low on Friday. So I feel if we break that, all we can do is take a nice juicy look below, and we've got to reverse in here. Otherwise, we're going to be heading a lot lower. And then again, I'll remind you though, if we come out of the gate strong and we take out the 50-day, we got to keep the focus up here around 46.50 or so, for the high 46.40s to the low 46.50s. That's where our 20-day simple moving average is going to be at. Hope this all makes sense. If you have any questions, just send me a direct message on the private Twitter account. Have a great rest of your Sunday. Good luck and good trading.